Ladies and gentlemen, I don't know how else to say it. What we are seeing right now and what we will see in the next move over the next few days is quite literally make or break for Bitcoin. And it might not seem like it because it might just seem like a regular bounce of support and a normal bullish move. But I assure you, there is much more to this than as it seems. And most people simply aren't recognizing that. I'm here to show it to you in a concise format. We're not wasting any time today. Ladies and gentlemen, you need to see this. Guys, before we get into it today, VIP trading group on Telegram, you can find the information and results in the description below via that information and results group. We've got the BitGet and BingX exchange. If you want an exchange to trade crypto on, these ones will suit you very well. BingX is global non-KYC. BitGet is global minus the USA. Referral links down below for discounts. And then finally, the Crypto Academy, become a trader 10-unit course. If you want to learn how to trade, that's the place you can do it in a 10-unit course. So now let's get into it, right? I'm rushing through today, and you probably noticed that with the speed in which I did those advertisements. I'm not going to spend much time today discussing the charts. I want to make this video as digestible as possible, just getting out the main points and the main things I'm looking at. So I'm aiming for under 10 minutes. We'll see if it happens, right? Basically, what I'm looking at is this. I want to start with the macro to give you an idea of how important this region is. I did not lie in the title. This is crucial, absolutely crucial. So we have a macro trend on Bitcoin that is developing. There is two confirmed data points. One data point that is pretty much confirmed at this point. It's acting the same way the other ones have. It's supported by the 4-year cycle. So these data points are more valid than regular isolated data points. This is not an isolated trend. This is a trend supported by other micro trends. And basically what it is this. You'll notice that every single cycle, which we have cycle 1, cycle 2, cycle 3, we formed 3 distinctive horizontal lines. We form two separate distinctive horizontal lines and then one measurement line. We'll describe it in a second. We have this yellow dotted line, which is the bull market support zone extended across. We then have this yellow horizontal line, which is the bear market kind of bull trap bounce top, okay? And what you'll notice is that every single pre-halving kind of pump that we see, which we're in right now on Bitcoin, we see a rejection from that yellow level 2 months after a breakout of the dotted yellow line. So if the dotted yellow line breaks to the upside, we break out of the bear market definitively, breaking that macro level. Within 2 or 3 months, we reach the yellow solid line for resistance. It happened in 2016, it happened in 2019, it's happened again in this year. And then what we see is a rejection, a pre-halving correction stemming from that yellow horizontal line, which brings us all the way back down basically to the dotted yellow line, but not quite. So just above it in 2016. In 2019, we actually did reach it. And this time, if we were to see the same thing, we would be going back downwards to around 32K, maybe 35K. All right, 35K, let's just say, which is, $3,000 lower, 10% lower than the 38.5K bottom we reached. If we're looking at the RSI, we can see it's not only the horizontal lines that have developed this trend, it's also the RSI. We reached the same level on the monthly chart RSI, which is 67 on the monthly chart RSI at every single yellow horizontal line rejection. And again, this is all compiled within a larger, intricate 4-year cycle theory. So the point is, there is a strong macro trend that is part of the 4-year cycle theory that says that Bitcoin should reject here from 49K on the monthly close. Now, obviously what this means is that, well, until proven otherwise, that is what we'll be likely to see. That is what the trend suggests, right? So that's the first point. But the second point is, if we do see a deviation, if Bitcoin does actually close the monthly candle above the yellow horizontal line, above 49K, because that's where it is, right? That means that we've seen the first significant deviation from a 4-year cycle trend, which is bad news, okay? Because we do not want to be seeing deviations from the 4-year cycle trend. Guys, just to give you perspective right now, the 4-year cycle is what has developed the entirety of Bitcoin's price action since 2012. Every single top, every single bottom has been predicted perfectly within the 4-year cycle date range trend. If we start breaking the 4-year cycle, we simply do not know where Bitcoin is going to go or what it's going to do next. That's the reality. We simply do not know. It could go parabolic. It could do something completely opposite. It could bottom out. It could top out within 3 months and go downwards from there and start a new bear market. If we break the 4-year cycle, there is no cyclical basis for any particular macro belief on Bitcoin outside of speculation. This trend is the trend. That is the trend that Bitcoin has. Now, obviously, we will develop new trends. There will be micro trends that can be extrapolated, but it will all be quite unreliable in comparison to this. So it's absolutely kind of crucial, I guess, to the health of Bitcoin that we remain our macro predictability. And in my opinion, that means that remaining within the 4-year cycle will be the ideal scenario. Now, obviously, it doesn't really matter what I think or what I feel. What matters is what happens. And this is why I'm showing this chart right now. it is very important, okay, this monthly candle close, because if it's above 49k, or if we even clearly break above 49k on the daily chart, break above 53k, for example, right, that's doing some serious damage, or the first real damage, I should say, to the 4-year cycle. It wouldn't necessarily invalidate it alone, but it certainly would start to do damage to the overall trend, and it would start to break the infallibility of it, right? The 4-year cycle has never, ever been threatened before. Even in 2021, when it looked like we were going to go much, much higher, we formed something that was just a 10% higher than the previous high, you know, a 19% higher in total cryptocurrency market cap. It was a complete disappointment. It was a complete failure in a way. But even then, we topped out perfectly with the 4-year cycle, even when it looked like we wouldn't. So right now, I want to quickly just clarify. The monthly close is probably the most important thing we're looking at. Okay, let's go to the daily chart real quick and just look at that for a second. We can see the daily chart is testing that 49k resistance box. Okay, we've got a box of resistance from around 47k to 49k. That's our major resistance level. Right now, we are at strong macro resistance. It's macro resistance that we've formed on Bitcoin, stemming all the way back, if the chart loads, all the way back here to the dead cat bounce in 2022. So this is not a zone to be stuffed around with, even on a short-term level, although Bitcoin definitely looks strong in the short term. The fact of the matter is, you're not really going to be, you know, doing yourself a favor by being bullish at resistance in any market environment, in any financial market ever. So right now, as of right now, where we are currently at 48k, being bullish here is kind of stupid because it's macro resistance. I mean, I don't think anyone will disagree with that, even the people who think it's going to break. You can't be longing into macro resistance. That's how you get trapped out. So right now, there certainly is, as explained by the macro trends, a possibility and a strong possibility at that we form a double top here. Okay, and we go downwards from there. That is a possibility that is very much on the table. But as of right now, the bullish signs keep rolling in. And that's the reality. So we've got bullish pennant formation, broke to the upside. We've got this yellow line here. I'll make it pink so you can see it broke to the upside in the RSI. We have formed a new RSI descending resistance line, but right now it's not a confirmed break. But where we are right now in the candle, we're currently above it. So it could be a confirmed break by tomorrow. And just all these new resistance zones just getting whacked down one by one by one. We're seeing the weekly candle closing above a definitive resistance level at 43.8k, which is marked by this weekly candle close, this wick here, this weekly candle close, this wick here, another wick there. You know, 6 separate retests in that level. We're very definitively going to close above it now. It's very unlikely we drop below 43k in 24 hours. So that's another bullish sign there. Fact of the matter is, there's lots of bullish signs on Bitcoin right now, and it is really calling for some nail-biting price action. There is also a considerable bear case, or I mean, first and foremost, the macro bear case, as you can see, but that's the monthly candle. That's 18 days away, right? It's quite a long period of time away. I'm talking about short term. If we're looking at 2019, we can take a fractal from 2019. This is the pre-halving top in 2019, which of course we can draw correlations to because it's what we're basing our macro trends on the chart I just showed you here. And you can see in 2019, we formed a kind of a similar structure where we're in this kind of ascending structure, which we're seeing right now. We formed multiple different highs. We retested those highs, formed things like double top formations and stuff like that before we eventually, and we lurked around for a long time before we eventually crashed downwards to the proper pre-halving correction, which bottomed out a few months later, or more like 5 months later. So the fact of the matter is, if we're looking at 2019, well, according to 2019, what we're doing right now isn't that abnormal, but there are threats here. There are threats that are developing as I've shown you on the charts. Right now, I'm not really convinced of anything. I don't think that, as I said, you can't be bullish going into resistance. It's not logical. So seeing that you can't be bullish going into strong resistance, and seeing that we also have a macro trend that has lasted since, 2014, telling us that we should reject here on the monthly close, it does seem illogical to be getting bullish here in the short term, medium term. I do stand by all the points I've made in the last 2 months. I genuinely do. Given the same data, I would have made those same points again. At this point, what we need to be doing is watching and observing. That's the reality. This monthly candle close in 18 days. I know it's 18 days. It's a long time, but it's very, very important. Obviously, if we do skyrocket up to the mid 50Ks on Bitcoin, we don't really have to wait to the monthly candle close anymore. It's just so long as we're lurking around this level. Say we're above 53K, which is our next major resistance above 49. You know, but we're below 53K, then the monthly candle close is very important because it could be a fake out. But anything above 53K, we've pretty much confirmed the breakout here, and we've confirmed a deviation from one of the 4-year cycle's fundamental trends. Again, it wouldn't mean a complete break of the 4-year cycle itself, because fundamentally the 4-year cycle is about tops and bottoms, but it certainly would be a dent in the armor, and it's a dent in the armor we don't want to see. So, guys, I want to make my opinion very clear on Bitcoin. I'm a macro investor. I'm a macro trader. Okay, obviously I trade short term as well. I'm also a day trader, but fundamentally on this YouTube channel, what I'm talking about, Wolves of Crypto, my focus is macro. All of my predictions have always stemmed from macro. You can check my track record on the featured video of this YouTube channel and see an exceptional track record with very few losses, right? Very few losses on macro moves based on macro trends. I cannot disregard the macro trends because of a bullish bias in the short-term charts. The fact of the matter is the macro trend, which suggests a rejection vaguely from that 49k region, is still there until it's not. So we cannot throw it out the window yet. I don't think there is reason to throw it out the window yet. There is no indication at this point that it is broken yet, okay? There are signs that it could break. But right now, those signs are speculative, and the data is here. The data is right on the screen right now. As of current, Bitcoin has not done anything that is not to be expected, right? That's as of current. Even in 2019, we went up to the same level we topped out on. We double topped from that level. We went up close to it again on 3 separate occasions, right? This could be what we're doing again this time. So this price action isn't necessarily abnormal, but it certainly is something we need to be keeping a close eye on and monitoring because it could do damage to the macro structure. And a lot of people think that macro damage can only come from downside moves. It's completely wrong. Upside moves can damage the macro just as much as downside moves. That's the reality. A super cycle might be attractive, might be appealing. People might want it from an emotional level, but I assure you, you do not want a super cycle. You want a regular bull market because that is going to make you the most money through predictability. Guys, without further ado, I'll end the video there. Keep an eye on this chart. Obviously, I will as well. So if you want to keep an eye on this YouTube channel instead, you can. I'll be watching this chart like a hawk, and I'll also be watching the daily chart like a hawk. In tomorrow's video, perhaps we'll give you a more in-depth short-term analysis. Ladies and gentlemen, thank you for watching. I hope you enjoyed, and I'll catch you in the next video. Cheers.